We're on YouTube. Hello, YouTube. We're going to be going on Facebook. All right. We're good? Live? Ladies and gentlemen, we've gotten amazing feedback on the recent Simple, Effective, Easy strategy of the Know Your Limit 21. Is the Know Your Limit 8 back as well? I'm going to take you through earnings names last week, and we're going to go through them, and I'm going to show you its efficacy. I am Mark Melnick, and this is the Newsbeat Show. Good afternoon, ladies and gentlemen. Welcome to the Newsbeat Show. And I have so many great things to talk about here today. By watching this video, your Green told me Mark Melnick and T3 Live, harmless and not responsible for anything. Okay, so I was getting a lot of great stuff about the Know Your Limit 21 strategy. And it just basically its efficacy. For the most part, it puts you in a very low risk situation, and it could be a low to high reward situation. So there is a range between it. But the whole point I thought of last week was to really just stop and think about low risk situations in this market. Now, if you haven't noticed, the market has been a little choppy recently. And with that being said, it's not the biggest deal in the world. And what I mean by that is it's because we're too bullish for its own good. And I'm telling you, it happens every time. And I'm going to help remind you. I mean, we saw the Qs last week just crazy glued to the all-time highs. If you're not a Newsbeat live member, fine. You wouldn't have heard me say things like, for example, on Friday, when the Q started plummeting after 10 o'clock, me saying when we were at day lows, guys, we're going to just grind right back up because we are not going to have the volume or the strength to push lower. And that's exactly what happened. And short of a knee-jerk reaction, I mean, the market has been in the tightest range we've seen in a while. As a matter of fact, not to sit here and give out titles, if you will, to the triple Qs. But we actually had the lowest volume week this year on the triple Qs, 81.8 million shares. This is a weekly chart of the triple Qs. You can see that we've just been grinding up. And if you actually look at your months, you'll notice that for the most part, not everyone, for the most part, your months tend to be as good as when the market fell down prior. So a lot of us did really good in January. We have a video calling the dead bottom here, of course, in late December on December 24th, and it rallied. And then it started getting a little choppy right over here in late April to early May. And then what happens is, again, weekly chart of the Qs, the market fell, and then all of a sudden we had a really good June out of nowhere. And then July started to grind up and get a little choppy right until that happened. Then August was decent, and then September was looking medium, a little better, a little slower. We dropped we dropped in September right over here, and then we had, people telling me in the room they're having their best months of their career in October. Well, we're going to need a little bit of this to head lower. In the meanwhile, I think it's imperative that, as I've done videos basically telling you guys don't stick with your game plan. And I know you're going to have like people on Wall Street who are going to do the fake faint out. It's like, when the guy opens up the window and the two like limousines or whatever next to each other, and it's like, can you please pass the jelly? And then the person with the gray poupon is like, oh, and they faint. Like the same thing is when I tell people that you shouldn't be following your game plan um, in this month. And I'm going to bring a strategy to you today, again, which is going to help you a lot. But you have to understand where it's coming from so you know its application, you understand the process about it. The reason why I'm telling you not to follow your game plan is because your game plan does not take into account things in the market. For example, I'll prove it to you. Tell me what your game plan says of how to trade when the market is at all-time highs, glued to the all-time high range. Tell me what your game plan says to do differently. I'll wait. I'll wait. Tell me. Oh, nothing? Tell me what to do with your game plan after the market bottoms out after falling down and then goes up for a few days. What do you do after those few days? You have a game plan for that? Tell me what your game plan says to do then. My game plan just says look for these candlestick formations, and when they set up like this, I could buy here, stop here, take profit there. Nonsense. It does not work. So what I did last week, and when I say it doesn't work, there's somebody out there, the hundreds of thousands of people, it works for me and five traders I know. I'm generalizing. Please keep in mind. And generalizing, unfortunately, is a not used enough tactic. That's why most traders fail. Because as a generalization, most traders will lose money. Okay, I'm making money in this environment, but I'm changing my strategies completely. I'm changing my strategies completely in this environment. And I've been just looking to make small, consistent money. November has been an extremely slow start for me for the month. I'm looking it up now to see how much I'm up. I'm up $14,290.31 with a phenomenal cost basis proceeds. I make 14% of my money pretty much. I'm making 14% of my money. So every dollar I put in the market between my winning trades, my best trades, my worst trades, my losing trades, my break-even trades, for every dollar I put in, the market gives me back 14 cents. So I put in $101,000 into the market here. I guess I'll take a quick screenshot for you just to show you what's going on. So I'm just reading it off a different page. I just want to make sure I don't get, I'll just cut and paste it right now as I'm looking up. Okay, just make sure my account information isn't on there. All right. So this is what I copied and pasted off of Microsoft Paint right now. And you could just simply see um, not as nice of a start for me as last month in October. Okay, not as great as of a month, but you have to understand that low risk is what got me to where I am. The impressive thing, $14,000 in a little over a week, I guess. I mean, how many days is November 1st to 9th trading wise? Let's see. November 1st was a Friday, 6 trading days. So just to give you an example of the type of buying power on average, again, we're averaging it out here. On average, my cost basis was $101,814.88. You divide that by 6, and on average, I needed $16,969. Let's call it $17,000. On average, I needed $17,000 a day in buying power, just so we're super crystal clear. This is done through options, of course. $17,000 in buying power every day to make this P&L. And again, I could just show you right here. As you can see, I'm making about 14 cents for every dollar I put in. The impressive thing with is, again, not the 14,000. To me, that's actually the most useless statistic here because you can make more or less depending on the type of money you're throwing. But I've been taking it, as you guys know, just extremely light so far. And this is the impressive thing because that is what knows I'm psychologically strong. It wasn't a stupid all-in situation and it went and ripped against me and then ran with me. I've just been making money consistently like every single day. Small, modest gains, averaging what? 2,400 a day. Like nothing really, again, to boast about. But the point I'm trying to make here is the risk. This part right here is the risk that I'm taking. That's the risk. And you could see that I'm taking very small trades, winning trades, consistent trades. The number is useless. I'll break $1 million this year, no problem. This number is useless. Do not look at the numbers. And no swings, no overnights, none of that as well. Just simple intraday trading, right? So the point I'm making here is I'm going to bring to you another low risk strategy because the truth is I cannot stand the market at all-time highs. The psychology of the market when you're at all-time highs. I just want to give you an idea of October. Many of you are like, Mark, my October was phenomenal. I made so much money. Look at what we did in October. Look at from here's October 1st all the way to October 31st. Just to give you a clue on the monthly, the Qs moved $16.01. Let's round it down to 16 bucks. $16 range. And if you realize the bigger green bars, like let's say you're somebody who likes to go long. And I know there's a lot of people out there who are like, I have no bias, short or long. Most gurus do have biases. The truth is, I've made the vast majority of my money in my career going long. Yeah, I made easily a couple million in this little time range here from like '07 to '09, but you know, the vast majority of my money was going long. And here's a monthly of the Qs, obviously, as you can see here, because the market went up. Do I have a bias to the long side? The truth is, I probably do, even though I don't think I do. Like if you ask me, Mark, are you biased to the long side? I'd probably say no. But then I'll look at my P&L and L and you'll say, well, you made most of your money from the long side. And I'm just going to respond to you, well, that's what the market did. You know, ironically, when I made a lot of money back in '07, '08, '09, it was actually going long, believe it or not short. The majority of the money I made there was going long. So maybe I do have a bullish bias, which is common. And the truth is, people who have bearish biases, and considering I would say 98, 99% of traders have a bullish bias. And the people who have bearish biases, who try to influence others who have bullish biases, are going to destroy you because you're not in the same mindset as a bearish trader. The truth is, a lot of traders are not comfort or do not have the same comfort level going long or short. I'm doing this entire psychological breakdown of the entire process, and I'm going to teach you it. And why am I talking about this? Because when I show you the strategy I'm about to, I wouldn't even use the word unveil, just sort of a little update, minor tweak. It's going to help you make money in a low conviction environment. So yeah, I am very skeptical of making lots of money right now in the market. I would rather just be safe. So what I did here was I was looking on names that reported for the entire week, and I just started unbiasedly writing them down. You'll see I crossed off Cree, and I probably have to cross off a few more because they reported 2 weeks ago, like in that week of October, the last week of October. I am just looking for names that reported in the last week. And as you can see, I just started writing them down. Again, I don't have the answers for them. We're going to go over it with you. We're going to explain the strategy. But I wrote down pretty much as many big names as I can find. If anyone in the Newsbeat live room wants to add to this list, basically Pins, Baba, Fortinet, all Under Armour, Humana, Stamps, Disney, Activision, Roku, Trip, Qualcomm Square, Expedia, Fossil, Ralph Lauren, Teva Match, CVS, Adobe, Uber, Ameren, whatever, RNG, tons of others. It literally goes to like the bottom of the page. I don't know if you guys can see the symbol so clearly, but you see I wrote it down and I just started jotting them down. So let's go over the strategy real quick. We're going to show you the recent version, which was, again, created not even half an hour ago. I mean, it's basically an old strategy that's tweaked to work now. And your screen will go black. Your screen is black. You could just hear the sweet serenade of my voice. Your stomach feels better because you don't see my face at the moment. Don't worry, I'll make sure I bring that back. Okay, right over there. Know your limit 8. It's a very simple, effective, easy strategy. Very simple rules. You choose whoops, see, I already messing up. You don't need to choose an earnings name with a gap up. You just need to choose an earnings name. See, already tweaking it with you. See, I literally just released it. See that? Like, simply just choose an earnings names. The best ones are offered by the Newsbeat Live Room, in my opinion, but those are the names I'm going through, right? Bid in on the calls or common stock or puts. Okay. So it's basically one of the strategies that you could use in either direction. In English, I'm going to explain it to you. You have an exponential 8 on the daily. We're gonna pull it up with you. Watch this. New chart. We'll go to the Melnick 1 chart. We're just going to add, click the little green arrow here. We're just going to add moving average exponential. Just add that to the chart. We're going to change it to 8, and that's all we need. That's it. It's just an exponential 8 moving average, and it's only on the 5-minute chart. Okay? So it's only on the 5-minute chart. So we're going to see basically when these earnings names hit this yellow piece of dental floss, was there a low risk trade? One of the most deadly things a trader can do in this current environment is very active trades and just trading all day. And you guys know it, and you guys see me and not doing it. And a lot of you traders in the Newsbeat Live, I'm like, thank you, Mark, because I finally stopped over trading. I'm helping hundreds and hundreds of people, thousands of people with these videos. Just take advantage of them. Just take advantage of it, of what we're showing you. So we're just going to go down the list, and here is the whole point of the experiment, just so we're clear, and I'll show you whether I felt they worked or not, and you can mark them down. You could follow along as we go through here. But here, just please, again, understand the mentality. Win or lose, I don't care. Are you in a low risk situation that would give you a scalp, and maybe you leave a small runner if you desire, just as I pretty much say take your profits quickly, leave a small runner if you desire. Then, of course, happy trading, make money. So let's just go ahead. We're going to start out with the earnings names, and they either had to report the night before or they had to report um, that morning. So, the first trading day that you could have traded after earnings were reported. So I'm going to move my mug over here. Okay, so you see Pinterest gap down on earnings. Since it gapped down, you could only short on this strategy. Was there an opportunity, a low risk opportunity to short as it broke the exponential 8 for the first time, which was right over here? The exponential 8 was 1975. It blipped up to 1983. I love that even more when it breaks, and dropped down to 1955. And I know what you're thinking. 28 cents. I'll tell you right now, that's like a 1.5% drop in 5 minutes in Pinterest. We're looking for small, low conviction ideas based on the market environment we're in. So even though it dropped here and then it grinded up and maybe stopped you out for a nickel or 3 cents or penny or a 7 cent loss, I'm saying that the 28 cents you were up would have been an effective trade. And I know you guys are like, well, and I hear it all the time. There are people who come to me and like, Mark, I'm here, I started trading because I'm here to make dollars, not nickels and dimes. And it's like, you're going to lose a lot of dollars trying to do that. What's wrong with a dime? What's wrong with making, for example, 14% of your money? Is there anything wrong with making 14% of your money? 10%? What if it was 10% of my money? Let me well, I'll lower it a little. What if it was 8%? What if it was 7% of my money? What if I threw $100,000 in the last, not week, but 6 trading days to be technicals, November 1st to 9th, and I was up 7 grand? Would that be, is that out of line? Is that out of line with the small cost basis? No other trader out there is going to show you their cost basis, because if you trade common stock, it'll be obnoxiously high. And they know that they need to keep throwing in hundreds and hundreds of thousands of dollars to scalp in and scalp out. How do I know? Because I was that person before I started trading 99.99999% options. I was that person. I'm talking to me. And I know how it works out there. And there are people with genuinely small accounts, and you're not going to be able to make a dime following somebody who's trading hundreds of thousands of dollars of stocks in and out for every single other trade. People don't have that sort of buying power. You're under the pattern day trading rule effects, forget it, you're screwed. Why even follow someone like that? It's funny because that's what I started telling people in 2012. I was broadcasting at that point, not for a while, 5 years. I was a broadcaster back in 2012. And I was literally telling people, to the point because they're coming to me with PDT, with accounts under 25 grand. And I just basically came to them and I was like, and they're like, I can only do 3 trades a week. And at the time, I was literally encouraging them to stay and to trade. And in reality, I look back at it now like encouraging them, saying not telling them to trade, but encouraging them in terms of like, oh yeah, you can make like real money doing it. In hindsight, I was wrong. I was wrong. I mean, yeah, it's mathematically possible, but I was wrong because a lot of the traders who are trading common stock, a lot of the gurus, a lot of the rooms, a lot of the services, a lot of the newsletters, a lot of the ABCDEFGs on Wall Street, they're doing hundreds of trades. Try telling that to somebody with a $10,000 account. Try telling that to somebody with a $20,000 account who's under PDT. They can't do this stuff. But people who are following strategies like this can do that stuff. And I'll probably share it tonight on the Newsbeat show, all the wonderful emails I got. So the point I'm making back over here are these are very low risk trades. Yes, you make 1.5% drop in your money. Your puts can easily move 10, 15, 20%. And you could get that sort of return on your money. And I'm generalizing here. Okay? So to me, a name like Pins would be great. Next on the list, I'm just going down the list, is Alibaba. Now, just remember the key of the strategy. It has to happen after 9:35 a.m. Translated into English. If you hit the exponential 8, and again, I have it written out right there. You can just see, has to happen. So basically in English, it's after the first 5-minute candle. I should probably use the word after. I just wrote the first 5-minute candle after the first 5-minute candle closes would be more accurate. Okay, I'll just going down the list with zero bias. I'm positive I'll find names that fail. Here's Alibaba on earnings, right? Check this out. Let's see what day did they report. Just double checking. Um, uh, let's see. And again, I'm positive I'll be wrong. They reported on November 1st, which is all the way down here. November 1st, right over here. Check this out. Whippy, right? Look at that whip. Whoa, whoa, whoa. First bar closes, hits the yellow line for the first time, the exponential 8 for the first time. It has to be the first time. We're very clear on that. Very clear. Hits it for the first time right over here at 177.47. Bounces to 179. Your trade is done, in my opinion. Yeah, I see that it ran up to 182 afterwards. I'm not even being Captain Obvious or hindsight over here. I'm saying you caught a little scalp. It's doable. The trade is successful. Was it quick? Yeah, probably. I mean, it, these bars are 5-minute long. You have to be focusing on a name per se. I'm sure you're not going to catch 100 of them, at least until we have our Newsbeat. I'll go out. Wink, 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 wink. Fortinet also reported, gapped up, pulls back right over here to the exponential 8, right under 90.56. You buy it underneath 90.56. It's 90.46, and on the next bar goes to 91.38. On the very next bar, it literally jumps 72 cents. That is doable for a low risk scalp. And even if for whatever reason you did not take that money and you bought it over here and then it flushed down, you're getting a tight stop loss, whether you put it under this candle or under this candle or under this candle. I know what a lot of you guys are thinking now, like where should my stop loss be? And it's too complex of a question. Most traders think that somebody's doing them a favor when I tell you where a stop loss is. I'm not telling you sit there and hold it forever. I'm saying base it on a time thing. If your trade doesn't work in the first 5-10 minutes, chuck it. Chuck it. Like it doesn't matter where it goes. I'm not saying sit here and hold it for 20 minutes before it could stop you out. Over like oh, my head's in the way again. Whoa. That was interesting. My head just look at that. My head squished. Woo, see that? That was weird. Anyway, point hits the exponential 8 right here, pops up, gives you a doable trade. And just like I showed you on Baba. I don't care what happens after. Yeah, like maybe you could have held the Fortinet and maybe it would have digested and you could have held it for a few days and you would have made a lot more. That's not what I'm talking about here. I don't want a lot of risk on in this environment. Some environments I do appreciate more risk. This isn't one of them. Not when we're at all-time highs. So right over here gives you one little jump. What I am arguing is that all you needed to do is be part of that. That's it. It hits right here. You buy, it explodes 70 cents. You caught 30, you caught a quarter, you caught 40, you caught 50, you caught 20. Beautiful. Take the low take the low risk trade for a profit in this environment. I'm not sugarcoating it. Again, the people here trying to catch dollars are the people giving back all their money despite the market going up, even the people going long, as a generalization. Okay. Now here's BHC. That's the old Valiant. Gapped up, hit the exponential 8. This is the first 5 minute of the first 5 minute of the day right here. Hits the exponential 8. This is not valid. You can't buy it here and hope it goes up here. Why? Because it could only hit the exponential 8 after the first 5 minute candle closes. So it did it on the first 5 minute candle. So BHC didn't work or fail. It just wasn't valid, and you would know to ignore it ahead of time after you see the yellow bar right here hit for the first time, this little yellow line. Under Armour gap down, so you're looking to short it as it hits the exponential 8, right? Well, I'm telling you, it is right. Look, hits the exponential 8 right here through 1833. Beautiful, breaks through. You're trying to do it as it goes through. Why? Why go through as opposed to hit? Because that is my strategy. After it goes under or over, I literally mean every word I say here. Okay, so it goes above right here for the first time. As you can see, it's this exponential 8 right here for the first time. 1833 goes to 1840, drops to 1810, a 30-cent drop. That's almost a 2% move. What I'm saying is, again, not to even sugarcoat it, maybe you left a small runner and you watched it, tank to 1750 as you shorted it right here. Beautiful. I'm saying just even this little red bar right here was good enough. Really, really, don't be greedy. I'm telling you, the nickels and dimes add up. Believe me, I am living proof of it. Believe me, you do not need to make a lot of percentage return to make a lot of money in this environment when you're using options, exercising the Newsbeat live strategies. And whether you're using common stock, the only difference is, yeah, you can make, similar money. The only difference will be is you're going to have a higher cost basis proceeds than me. And if that means nothing to you because you have a lot of money, God bless you. That's fine. But for those people who are dealing with much smaller accounts, I promise you, I just look at my trading account. I don't even have a lot of money in this account. I just milk it every month. Just took a $75,000 checkout last month. Why? Because I can, and I don't really need the money sitting there in the account. A lot of traders, the problem is it's funny, nobody mentions it, but when they actually want to grow their account, like Mark, I'm making money with 500 shares in and out. How do I get to 1,000? Well, you're going to need more buying power now, aren't you? And they're like, yeah, because now I need twice the size. The funny thing is with options, when you take your game to the next level, you don't really need a lot more buying power. I mean, to take my game to the next level, I could go to $25,000 from 17,000, in which I showed you, and I'll be ready for that. And so you don't really need a lot of money. The difference is with common stock, if you're going heavy in and out, you could be at 250,000 buying power. You're going to need to get to 500,000 before you can notice any P&L difference. See the difference? Less is more when it comes to options. Point being made again. Short UA right there. Not being even captain. Oh, look what happened afterwards. That's all I'm saying is right over here. It hits right here. Look at the next 5 minute bar. I'm not sugarcoating anything. I'm saying that's the trade. It went from 1840 to 1810. Maybe you caught 20 cents. I'm not saying you caught 30. Maybe you caught 15. And yeah, if you did leave a small runner, it would have worked in this case. Beautiful. And I'm just going down the list. The next one is C, is Sealed Air Corporation. Let's see, what day did they report? I think it's obvious, but I just want to double check. They reported November 6th in the morning. So they reported right here in the morning. Okay, beautiful. So right over here is the first 5 minute bars. You can see on the top left, 9:30 to 9:35 a.m. And it opened up here, or if a gap up hits the exponential 8 right away, you can't buy it here. You can't buy it here. Even though it bounced a little and then fell and kept falling, you could be like, oh, look, market failed. No, it didn't fail or succeed. It hit the exponential 8 on the first 5 minute bar. Well, why do you ignore it? Because that is the damn strategy. It's step 2. Again, take literally every word I'm saying and you're going to be okay. So right over here, hits the exponential 8 on the first 5 minute. You ignore it. You don't take it. Doesn't work. Doesn't fail. As soon as it hits it on the first 5 minute, done. Next is Humana. Excuse me. Um, I'm just double checking to see when Humana reported. All right, so Humana reported on November 6th in the morning, same like S.E.E. Over there. So they reported right over here on the bottom. You can see November 6th. Gapped up. Did it hit the exponential A in the first 5 minutes? No. Look at this flush down. Right into the exponential A at 297.61. Breaks it. Hits 296.77, which is beautiful. You want to buy it underneath. And then bounces to $301. Again, I could see that it kept rising and rising. And then after that, just rose all day and never looked back. I see that. I'm not even going to Captain Hindsight it. You left a small runner on? You left a contract or two, 100, 200 shares, 50 shares? Who cares? This is what I'm talking about. I'll move my mug. This is what I'm talking about. You hit right here, you bounce. That. This it looks a little funky there. Like, huh? What kind of move was that, Mark? I'll tell you what kind of move that was a $4.50 move. Yeah, in Humana, a 450 move is enough for a scalp on a Humana. That's a 1.5% move in Humana in 5 minutes. You're telling me there's no value there? Again, so many traders, I come to you guys and I'm like, do you guys want to trade for a living? You're like, yeah, I do want to trade for a living. Everybody answers, yeah. So why are you trying to trade like you're trying to retire next week? Whoever said like, whatever happened to the story of the tortoise and the hare? That the tortoise wins the race going slow because the hare sprinted out, exhausted himself, was found by the side of the road, and somebody got hungry, shot him, and ate him. No, no, that's not the story. But he passed out and woke up later and lost the race, right? They probably both tasted good. Point being, I don't eat rabbit or turtle. I don't know why I'm saying that. Anyway, point being here, point being here, um, hold on. You guys can hear me in the room? I just looked up in the room right now. You guys can hear me in the room, I hope. Hope everything is good in the room. All right. All right. Still good. So again, back to Humana. I saw what happened afterwards. This is the only point I'm making. And I'll make the same point on every single name. Maybe sometimes you do have to hold for another 5 minute bar, but the point is this was the trade in this example. Yes, I see. I can see that Humana did this afterwards, and it went all the way up to $320 after you could have bought using my strategy under 297. That's not what I'm talking about. Talk and take the quick scalp. You leave a small runner. That's up to you. Humana definitely worked. Stamps, pain in the butt stock to trade. I think I lost $500 on this on Friday. More, maybe 600. Anyway, all right. So here's Stamps, gaps up, pulls down, ramps up, hits the exponential 8 for the first time, right over here. Breaks 94.48, hits 94.14. This happened to be a stock play. This wasn't a good option play. I actually did the options. I think I lost $600 on it on Friday. Did very well on Friday, by the way, but this was like my biggest loser of the day. Um, so, breaks under here, and again, not even sugarcoating it. This one wasn't a good option one because there was no way to get filled on the bid as the stock broke here in a very wide spread. So I don't want to pretend like this is a good options play. It wasn't. I tried it and it didn't work. In the future, I would ignore it, obviously. But look, breaks down under 94.48. Check it out. Hits 94.14. Let's say you got filled 94 and a quarter. I'm making it up. Doesn't matter, right? Stock jumps to 94.87, then 95. Let's say you didn't even sell out here. Let's say you didn't sell out on a little bounce in Stamps. Comes down here. You get stopped out. You're losing 20 cents. You're stopping underneath the candle after it breaks out. Maybe you even got stopped out right over here after the first 5 minute candle broke and you made a little bit of money. These are just not bad ideas. The whole point is, again, I'll highlight it, is not all the millions of dollars you would have made on this trade, which you wouldn't have. The whole point is that are you in a low risk situation? So many traders out there can pretend they like risk first, but what they do is the risk parameters they throw you are generally risk parameters that you won't be comfortable trading in. I'll give you an example. Buy at 50, stop 49, take profit 53. So let's say you bought a stock at 50 and your stop was 49. How many traders here would feel comfortable when the stock is down 70 cents at 49.30 before their stop loss hit? Honest, maybe you wouldn't, and I respect that. Me personally, I would be extremely uncomfortable with that. I don't find comfort in watching positions go against me. I really don't. Yeah, granted, I have positions go against me. It's less frequent than common compared to my winners. But yeah, I don't type in, can I get a yes if that makes you feel uncomfortable? So the whole point is you're entering these positions and you're up money almost instantly, regardless of what happens from there. Disney. Here's Disney. Now, this one I would have missed, but I want to just show it to you anyway. So Disney gapped up right here, comes down to this yellow line. The problem is it hit the yellow line. I'll move my face so you can see the levels. It hit this yellow line here to the penny. You can see on the top left side, E average 8 is 137.90 and the low of the candle is 137.90. It hit to the penny and then jumped literally $1.10, or even 85 cents on the first 5-minute green bar. Let's even just take it like that. Look at that. Hits here. Look at that beautiful bounce. I would have missed it. Why would have I missed it? Maybe you would have caught it. But for me, it has to go under or above depending on if it gaps up or down. So if it gaps up, I need it to go under the 8 EMA. So right over here, it didn't go under. It hit it perfectly and bounced. Disney would have been one that I would have made money on had I been filled, and I would have missed it for that reason. But again, I don't want to cherry pick any of these. I'm just going through all these earnings names. You could look at all the earnings names you're looking at too. I'm generally just taking the first next candle for a low risk situation. Here's the bottom line. Here's Activision, right? Let's see which day they reported. All right, Activision reported after hours on November 7th, so you could have traded it on November 8th, which was Friday. Okay, so this was one from Friday. Right over here, you gap down, you're looking to short it as it hits the yellow line for the first time. By yellow line, don't get confused by my trend lines over here. Like I know my trend lines come up in yellow. I'm literally talking about the exponential 8 line. So don't get confused. The exponential 8 line was like right here, not down here. Gaps down, comes into the exponential 8, 53.95, pops to 54.03, drops to 53.13, drops 90 cents from the top and bottom of that next 5-minute bar. And again, just like, yeah, if you held it, you would have lost. But again, I'll show you the same thing every time. I'm just talking about the first time it hit. Look at that. Right over here, hits, drops. Maybe I'm not saying you caught 90 cents. I'm not saying you shorted perfect. I'm saying you caught 30. I'm saying you caught 25 cents. 50, 60, 30, 15. I don't care what your number is. Were you in a low risk situation? Let's say because you're not following the strategy and you got greedy or had a bad decision, maybe you put a 5-minute trailing stop on it and you got stopped out right here. Or maybe you put in a stop at the top of the candle despite that was your entry and you took like a break even-ish as you stopped out. You shouldn't. Again, I'm not cherry picking. I'm showing you the next candle. Always. Take it. Usually this trade works within 5 minutes. See the point I'm making? At worst. Next candle, boom. Great risk reward. Next on my list is Teradata. And again, I haven't gone through these names yet. I can obviously see that Teradata gapped up here. So you basically, instead of thinking of your stop like, I'm risking 10 to make 10. I want you to change your mentality. As I say, drop your game plan. It's not about that. Your game plan wasn't designed for different market environments, and that's the fatal flaw in everyone's game plan. Well, you know what your game plan should be? You should come to me and say, Mark, my game plan is to adapt and evolve and use strategies that are conducive for consistency in the current environment for today. Now, if you say that, I'll say, okay, that's a broad generalization. But when you try to sit there and map it out, I'm sorry, ladies and gentlemen, you could map out what you're trying to eat for the next month and you're going to fail horribly. You could map out exactly how you want to live your days for the next month and it's going to deviate massively. I promise you, if you do not deviate your market strategy plans, you're never going to find consistency. Ever. Teradata. Reported earnings. Gap down. Okay. Hits the exponential 8 for the first time right here. Hits 2460, goes to 2462, opens and drops right afterwards all the way to 24 and a quarter. And again, I see it headed down lower after, and I don't want to. This is all I want to show you. This. And it doesn't look like much. Oh, let me move my mug. Doesn't look like much, but it's not a bad risk reward. It went from 24.62 to the bottom here of 24 and a quarter. It dropped almost 40 cents. It dropped almost 1.5% plus. Doable. And if you had a tight stop here and you shorted it at 24.60 and you got stopped out at 24.62 and you lost a couple cents, that's fine as well. Look at it as risk reward. And if you held it and you tried to catch more and it dropped to 23.91, God bless you. But again, I'm not even insinuating all this. I'm I'm not looking, everybody could look intelligent with showing you where their stock went after you can make a call. Anyone can do that. I'm showing you the next candle every single time. And I'm doing this intentionally to show you that you tell me if this was a good risk reward. Maybe it isn't for you. Look at all of them. To me, they're great. I love this stuff. Medifast, gap down on earnings. When are you going to hit the yellow line for the first time? Right over here. Perfect. One that failed. About time. About time. One that I would have 99% lost money on. Okay? It shoots through 71.78, gets as high as 72.99, and goes as low as 72.01. And again, I, I could see that if you held it with a wider stop, you would have been up nicely. And I'm not even going to say that. I mean, I just said it, but I'm not insinuating. This is all I'm insinuating. So maybe you short here and you get stopped out at the top right around here or on the next candle before it went down. You got stopped out as it was going up before it went down. To me, that is 100% legitimate of a loss. That's a loss I like. Perfect. Let's move on. Roku, excuse me, gap down. What does that mean? You're looking to short it. Hits the exponential 8 right over here through 120.02. We actually called this one in the room. Remember, if you break 120, then you're going to pull down underneath 120. And many people are like, why did Mark say that? It's because of the exponential 8. And yes, I see that Roku shot up afterwards. I don't care. As I will always say, I'm only insinuating the next candle. I'm showing it to you 100% of the time to show you exactly what I mean. You break through right here through 120.02, you hit 120.50, very easy to short Roku because it exploded through 120 initially and then pulled back. We were in the room trading it at the time. Very easy. Went from 120.50 to 118.75. $1.75 drop in 5 minutes in Roku. You could have easily caught 25, 30, 45, 50 cents. Easily on that $1.75 pullback is the point I am making. Are making nickels and dimes profitable in the environment? Not when you're taking 1,700 stupid trades and losing on 40, 45, 43 to 57% of them. Not when you're losing that much. It's not good. But again, do not underestimate the power of making 14% of your money. Do not underestimate how strong that is as an intraday day trader. I wasn't holding these positions for a year. Okay. And believe me, if I was, people would be like, if I was managing a large portfolio returning 14%, I would be considered one of the best money managers on Wall Street. And so would you. The cost basis proceeds like that, people would be like, wow. I'm saying that you could get to that point. I humbly believe that you can get to that point. Easy money. And again, you could look, we'll say, well, Mark, it kept running up afterwards. And again, I'll tell you again, I'm ignoring the ones that even fell down afterwards. You want to leave a small runner and get stopped out? You want to leave a small runner and get paid a lot more? Be my guest. I'm only insinuating the next real candle. Okay? Here's Trip. Hits for the first time right over here through 32.15. Hits 32.16. I probably miss it because it only broke by a penny and it's a Trip Advisor. Drops to 31.43. Goes as high as 32.33 and then drops to 31.43. There's no way you're stopping me out shorting TripAdvisor right at the top over here. I'm shorting TripAdvisor at the in the top end of this range here, probably even closer to here on this candle, most likely. Again, I don't have the trade in front of me. And the stock goes from 32.33 to 31.43, dropping after shorting at the top there. That to me is easy money. Again, I don't know or care what happened afterwards, but let's look anyway. All right, it dropped to 30.69. It dropped much further and then went up higher. But as I always say, I'm just showing you literally the next candle. All right, Qualcomm. The question, I just need you guys to understand as you watch this. The question isn't, did you like that one setup? The question is, would you be happy being part of every single one of these trades? And your answer might be yes, your answer might be no, but at least I'm putting you in a situation where you can answer that, right? Here's Qualcomm on earnings, gaps up, comes down right over here, hits the exponential 8. Doesn't really flush through. Only time it really flushed through was right here. So in all honesty, look, I don't know the number of seconds on in which this bar came through, but I'm not getting screwed up over here. I'm not getting screwed up on this trade. Just so we're clear, on Qualcomm earnings, as wild as it is, it went from the bottom here. The exponential 8 is, oh, my face in the way. The exponential 8 right here is 91.64, as you could see in the top left on this candle over here, 91.64. On this candle, dropped to 91.52. There's no way I'm getting stopped out for 12 cents on Qualcomm. There's a 100% chance that if I did buy it there, I'm part of this big green candle to 92.10. And then the trade is probably done for me, short of a runner, which the runner would have failed. But again, just not to cherry pick. I'm explaining to you logically what happens here. I'm not taking a 2-cent risk on Qualcomm earnings days, right? It went as low as 11 cents, and I'm probably buying it with a 5-cent risk. Is a guess. Again, I'm not in the trade, I wasn't in it, but you just need to see it and see if that's something for you that would work. Square, next one on my list. All right, so here was Square. Here was Square. Opens up over here, 61.91, hits it on the first 5-minute candle. Done, no more. I know it gapped up, and you could say, Mark, I could have bought it through the flush zone or would have ran up all day. You could have, but that's not this strategy. You ignore it because it hit that yellow line on the first 5-minute candle. Next is Expedia. Gap down. Let's see. Perfect. One of them that clearly failed. Breaks through right here of 101 and a quarter. I don't know what part of this range I'm shorting it at. Short ends up going against me. I'm getting stopped out probably here. I'm getting stopped out. This is easily a loser trade. But the beautiful thing is you need to know on an Expedia, especially if you're doing options with the wider spread, you're going to get filled near the higher end of this range, not the lower one. The tighter the spreads, the more likely you're going to get filled on a smaller move. The wider the spreads, you really need the stock to break through hard through the level before you get filled. Now, yeah, you could say here, you could have gotten filled at like 101.50 and then it would have dropped to 101.04. I mean, yeah, it would have been possible, but I'm going to mark this one off as a loser. Perfect. Great example of what a losing trade using this strategy would look like. Fossil. Okay. Fossil gap down. Hits the exponential 8 right here. And again, I'm not even going to, I don't even care that it kept running down. You want to leave a runner on it? Beautiful. Again, this is the only thing I care about. One candle, maybe two, max, like it's really short-term trades, right? Hits the exponential right here through 1065, hits 1071, drops to 1005 from 1071. Drops 7% in 5 minutes, I kid you not. Fossil, right off of the strategy. Easily you make a quarter on that. 20, and again, that's me making it up. I don't know if it's easy for you. For most people, I would say that would be, it would be almost impossible to lose money on that one. If you got deer and headlighted, you probably made more money. But yeah, because it kept dropping. But just to show you, look at that. Beautiful, right? That's a good example. I don't know the answers to these examples. Again, I'm just literally just going down the list, Xing off the names if they were unavailable, putting a little black X next to it if it failed, and putting a little check mark if it worked for me. And again, you be the judge for yourself. I know for me, these names aren't hard to make money on. See, this is a hard one because I don't know the Ralph Lauren options. This one might have been hard to get filled, but you could see right here with common stock, it would have been easier. Went through 113.20. Oh, my head's in the way of that one. Went through 113.26 right here, hit 113.21, and then exploded to 114.69 on the very next candle. I don't know if I don't really care what happens after, but the whole point being is just between these two candles here, you could see as it hit the yellow line for the first time and it shot up, would have been a lot easier on the stock side. Obviously, the trade worked whether you caught it or not. And I'm guessing, again, I wasn't looking at the options at the time. I'm guessing it would have been harder to catch on this one example, but obviously worked. Baidu gapped up on earnings. And again, this is all 5-minute charts. Baidu is a bit tighter. So this would have actually been easy on Baidu. 119.43 hits 119.37. Look at that. Right to 120.37. I don't care that it went to 121.58. Let's get that out of the picture. Let's just say what happened on the first time it hit that yellow line. What happened after on the candle after, right? Again, I don't like sugarcoating this. But look, you're buying at the bottom here. It's painless. And Baidu is tight enough to get filled after at almost 11 o'clock. This happened between 10:50 and 10:55. You buy right there. It shoots up $1. There's no way you're not catching 25 to 75 cents on that, depending on who you are. That obviously worked. Next, name I don't like trading per se, but Dexcom. Again, I don't want to sugarcoat it with what I like or don't like. Gapped up on earnings. Let's talk about this right here, okay? Just so we're clear. Again, I don't have the Dexcom options in front of me. This might be an easier stock trade. A lot of them will be stock trades. 197, but even whether or not you would have bought this or not, it's important to just note the statistical frequencies of success and failure. So right over here, 197.54 breaks through, hits 197.44, opens up higher, meaning it shot up afterwards to 199.28. So this one actually jumped up $1.84 before pulling back down. It went up $1.84 and then dropped. Yes, to me that is scalpable. Is it a name I like to trade? No. Teva. Be honest, I don't like to trade this one either, but it's a lot tighter. Let's say you're doing the exponential 8 on Teva. Now this is a hard one. This is a hard one because Teva doesn't really move too much. So just to show you the exponential 8 here, again, I don't want to sugarcoat, but it hits 863 here, gets as low as 862, so breaks the exponential 8 right over here by 1 cent, and then jumps to 875. That was probably your trade. I know it's very tight, and I could see this is one, and again, I know I'm being capped in hindsight here, but this is one that you could let potentially run to $9. This is one you could potentially let run to $9. Simply because it's in such a tight range that if you're buying here at 862 after the fact that you see it go up, not before, but after you already see it go up, you're dealing with a 0 to 1 cent risk. So I'm not saying I would have held it all the way here. Truth is, you could have made the quick scalp right here, moved 1.5%, which is again Teva. But yeah, the trade obviously worked. I don't think you would have made a lot on it. I mean, granted, if you sat there and you held it longer, you would have, but it's a good example. Match. Perfect. Is this one that failed? All right, so it reported earnings right over here. Okay. Moved up, moved down. When did it hit the exponential 8 for the first time? Right over here. Perfect example of a failing one. Good. I like the failing ones more than the successful ones because it's going to give you a good idea. Breaks through 64.49 at 64.71. You're shorting above it here. And then, rips against you right here to 65.23. Let's say it goes 50 cents against you and you didn't stop out above the candlestick here, which I could see myself holding a little longer here on a setup like this. How's that for openness and honesty? And then that would have been it. Like after 5 minutes comes, it's not working out, then I would have taken a loss. Great example of a trade I would have taken a loss on. Next one is Weight Watchers. And again, I will show you, we're almost done here, but it's very good that you guys are going through this. Weight Watchers. This is a hard one to understand because it's hard to tell if to me, this would have been closer to a break even, make a little, lose a little trade. You shoot up right here through 31.72 to 32.10. And then on this one, you go to 32.36 to 31.68. Probably would have lost a little here. Probably wouldn't have sit there and held that short. So I think this is a good example of a very minor loss I would have taken in Weight Watchers. And again, the whole point, even though I and others make money on this, the whole point is the risk. As I said in the beginning of the video, we're putting you in low risk situations. Yes, low reward, low risk. Yes, potential high reward. So I said low to high reward with low risk. I do like low risk, low reward though. I do lean towards that. CVS, this is a good one. This is a good one. Flushes down right here through 70.22. Hits 70.10. You're probably buying somewhere around that range. Flushes 25 cents against you here to the bottom. Again, taking the worst case scenario to 69.85 before bouncing and working. Easily a trade I could have gotten stopped out on. Great example of a loss that I could have taken on this. And yeah, a lot of you might have made money and held it a little longer. But I'll play it the same way I was talking about it, which is like this. Just showing you when it hits and the candle after. I could have seen myself losing a little on this one. CyberArk. And we're almost done here. We just have 7 more names, and I'll give you the results. I'll add them up. Hits the exponential 8 right here at 116.33. Just put my face. Right over here at 116.33. Bottoms out at 116.23. Bounces up to 117.79. Yeah, I see it goes higher after, but again, I'm just showing you you're buying at the bottom here after the exponential 8 breaks, and you're selling somewhere over here. So yeah, the maximum you could have made was $1.56. I'm saying you can make 50, 60 cents. That's what I'm insinuating. And again, making up the numbers, right? You have to generalize when you talk about trades you've never taken, right? I didn't take all these exponential 8s. But you could see, obviously, that it could have worked. Ring Central. Okay, this is an interesting one because they obviously gapped up, reported over here. Check this out. Hits the exponential 8 right over here at 161.43. It goes up to 163.34. Definitely would have made money on this idea. The bottom here of 161.43, it went 17 cents against you on a ring central that drops, puts in a $6 range on the first 5-minute bars. You're not getting stopped out at the bottom of that candle. And I said the same thing on the match, like I would have lost 50 cents as opposed to 10 cents, right? So again, I'm not, you know, pretending to do something that I wouldn't do myself. Like I understand myself as a trader good enough to this point. 161.43 to 163.34, about a little less than a $2 pop. And yeah, I see that it would have went, a little higher on the next candle to 164.54. So it would have jumped, $3.30 in this little time frame. Definitely a trade you're not losing on. Maybe you make a little on a ring central, but you could just see how it works. And again, not insinuating you're holding for the down move, but just showing you anyway. Ameren, this is a good example. I think just let me make sure I have the right day in which they reported on Ameren. Ameren reported the morning of November 5th, which is right over here. Hits right over here, breaks down to 1740, gets as high as 1750, stops you out. This is a great example of a losing trade and getting stopped out. Hits here, doesn't bounce a lot, falls down again, quick loss. I think that's a great example of a loss. Adobe, this is an interesting one. And again, a lot of you might be looking like I would have held it a little higher. I would have set the next 5-minute candles as a stop. You could do that as you wish. But just so we're clear, Adobe breaks right here through 286.26, hits 285.28, probably buying around 285.50 to 285.75, drops to 283.77. I think that's a good example of a loss. Even though I see that it went up afterwards after hitting this, I'm just going to go ahead and mark it as a loss. Okay, we're almost done here. Uber. See, I don't like to cherry pick, even if hindsight is 2020. Uber hits this exponentially. It gaps, obviously down on earnings. Just look at the yellow line. Hits right over here at 28.94. It's $29, then drops to 28.67 on this long red bar. That's easy money. Scalp money off a short, shorting in this range right here and covering somewhere by there. Two more names. EverQuote. Okay. Again, just showing you the candle and the candle after it hits, or the candle that it hits on, and then the one afterwards. Flushes through 27.05. It's 26.28. I don't think there are options in this one. And then jumps to 26.96. I know it looks weird. This is generally one in which I make money on, but I'm just going to mark it down as a fail. And again, you're not losing a lot here because you are buying it in this bottom range here. It just didn't do much here. And there are no options on this one, so I would have ignored it. But, even if you did buy it, it would have gone down a little more and then go vastly in your favor. I don't even want to get into that. Last but not least, Shake Shack. And remember, the whole point is risk reward. You're shorting at the top here through 67.35. It goes as high as 67.39 on this next candle. I don't think you're getting stopped out for 4 cents on Shake Shack logically. Drops 30 cents in your favor. If you didn't take that, you would have gotten stopped out definitely for like a 5-cent loss, 6-cent loss at like worse over here because you already held it for a candle. To me, like you didn't win or lose on that one. So I'm just going to count them off, count off the ones that I felt I would succeed on. And again, the whole point of this strategy is you have to understand it's not going to cause psychological toxicity because you are going to be in a low risk trade. You're actually just looking for very short term trades. And if you're somebody who suffers from over trading, me personally, I don't suffer from that anymore. I used to. I'd rather be doing trades like this throughout the day rather than suffering through just trying to reattack the same name over and over. How many traders out there can I get an 11 if you are a trader out there who trades a name, you make money trading the name, then you trade it again and lose money? Or you lose money in a name, you trade it again, you lose more money. How many traders often fail on their second or third time trading the same name? I don't anymore. I used to because I wait for strategies like this to set up, and I usually don't anymore. I used to be that person, so that's good. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. I have 19 check marks here. Again, this is just based on everything I showed you with my own biases for what I'm trying to insinuate here. Versus 1, 2, 3, 4, 5, 6, 7, 8 losses. For me, it would have been 19 and 8. So 19 wins and 8 losses, and the rest would have been ignored. And even the losses, a lot of them weren't that bad. A lot of them were break-even-ish type losses. So just to give you an idea, 19 divided by 27, that just breaks over the 70% hit rate for me. Again, I'm using a small sample size from last week's earnings, which is the best sample size to use, but is definitely what I see as a low risk strategy, at least psychological capital. You're not going to suffer psychological toxicity in this because you're generally, as a generalization, going to see your P&L up money immediately. And that is so healthy for your psyche. So many traders are like, as soon as you open up a trade, they tell me it's like you're down money right away. This is how you prevent stuff like that. Wouldn't you rather just see a green P&L as you open up a position, even if it's modest? Even if it's modest. Do I have to really show you again why modest profits can lead to bigger dollars? So I guess that was my little thing today. Again, if you want to copy the slide and you're not in the Newsbeat live room, go ahead and hit print screen now. Copy it, take advantage of it. If you are in the Newsbeat live room, I will be sharing it with our Twitter account, which is, you know, has exclusive access to Newsbeat Live members get exclusive access to our Twitter. And definitely look forward to us applying this strategy, the Know Your Limit 8. And just real quick, look, here's the Know Your Limit 8 strategy. We're also going to do the Know Your Limit 21 strategy after, and it always comes afterwards. So what you're going to notice on a lot of these names is like a lot of them have the Know Your Limit 8 and 21 working. So the first thing you're going to look for is the 8 followed by the 21. Very low octane trades, definitely not trades you have to be like obnoxiously fast on the keyboard to execute. And I thought you guys would enjoy another lower octane trade, especially one where you could get filled on the bid and don't need a market order to enter. I hope you guys enjoyed the Newsbeat live show. Happy trading, make money, and I'll see you guys tonight for another show at 7:30 p.m. If you're a Newsbeat live member, we have our group coaching session tonight, which is again offered for you inclusive with your service. It's a non-paid feature, just you automatically get it if you're a Newsbeat Live member. And of course, we'll see you tomorrow morning on the Newsbeat Live trading broadcast. Hope you guys have a wonderful Sunday, and I'll see you guys later.